Hello, everyone, and welcome back. If you've ever just stared at a financial chart and felt your eyes glaze over, well, you are definitely in the right place. Today, we're going to cut through all that noise and get to what really matters in trading.
I mean, just look at this thing. You've got lines, you've got colors, candles. It's a total mess, right? So is this some kind of secret map that points the way to profit? Or is it all just chaotic scribble? How in the world does anyone start to make sense of this and actually click a button?
Well, to answer that, we have to start with what we'll call the science. These are the cold, hard, technical tools that every trader learns to use. It's their attempt to read the market's language and hopefully predict its next move.
Yeah, you can think of these as the basic instruments in an orchestra. They are absolutely essential, and you have to know how they work. But here's the thing, just knowing how to play the violin doesn't make you a master composer, right? These tools are only one small part of a much, much bigger picture.
So let's pop open that toolkit. We're just going to look at a few of the most common instruments you'll always hear about. These are often talked about as the scientific foundation of trading, the bedrock of any solid analysis.
Okay, first up, Fibonacci levels. It sounds complicated, but the idea is that traders use these mathematical ratios, which are found all over in nature, and they apply them to the charts. So after a big price move, they'll draw these lines to try and predict where the price might hit an invisible wall and either stall out or turn around. Next up, you've got moving averages. Now these are fantastic for just cutting through all the day-to-day noise. By averaging out the price over, let's say, 50 or 200 days, you get a much smoother, clearer picture of the real trend. Is the market generally heading up or is it heading down? This really helps you see the forest for the trees.
And this right here is a perfect example of how traders put these tools together. A golden cross. It's a super famous signal. The idea is when that faster 50-day average line crosses above the slower 200-day one, it's often seen as this big, flashing sign that a major uptrend could be starting. It's a specific pattern they're always on the lookout for.
Now, how you use these tools really depends on what it is you're actually trading. I mean, are you buying the asset itself, or are you just betting on where its price is going to go? Let's break down that absolutely crucial distinction, spot versus futures.
Okay, here's the real difference in a nutshell. With spot trading, you are buying and owning the actual thing, the stock, the Bitcoin, whatever it is. And you only make money when its price goes up. But with futures, you don't own the asset at all. You're just holding a contract, making a bet on its price. And that means you can make a profit whether the price goes up or down.
All right, so we've touched on some of the science, the tools, the markets, but now we have to talk about the other side of the coin. This is the art. This is the internal game. And frankly, it's where almost everybody fails.
This quote right here, this is the whole point. All those tools, all those charts we just looked at, they're just the arena. The real battle isn't you against the market. It's the one happening right between your own ears. It's all about your psychology.
So this is the crucial mindset shift you have to make. Trading is not a salary. There are no guarantees here. The second you start expecting certainty is the second you've already lost. The entire game is about managing probability and risk, not punching a clock for a predictable paycheck.
And making that mental shift is incredibly hard, which leads us to this absolutely brutal statistic. It's a massive reality check for anyone who thinks trading is easy money. 99%. It's a shocking number, isn't it? But study after study and data from the brokers themselves shows that the vast majority of regular retail traders lose money over time. And they don't just fail to get rich, they actually lose the money they started with. So why? Why do so many fail? It's not because they don't know what a golden cross is. It's because of this stuff. It's pure psychology. It's taking a big loss and then immediately jumping back in to try and win it back. That's so-called revenge trading. It's seeing a price suddenly spike and buying at the very top because you're scared of missing out. It's a total breakdown of discipline. And look, if you need any more proof that these tools aren't some kind of magic wand, here it is. The data shows that if you just blindly trade based on some classic chart pattern popping up, you'll actually be wrong more often than you're right. The science, by itself, is a coin flip, at best. It needs context, it needs other factors to line up, and most importantly, it needs a disciplined operator.
So if the fancy tools and the secret patterns aren't the answer, then what is? What on earth gives that tiny 1% of successful traders their edge over everyone else?
Well, their edge is self-mastery. And it really breaks down into these 3 simple steps. First, yes, of course, you have to know your tools. Understand what they're telling you, but also understand their limits. Second, you must have a set of rules, your own personal trading plan. But third, and this is the most important one, you have to know yourself.
And this is the real secret. Are you kind of an impatient, impulsive person? That's not a flaw in trading. It just means that a slow, long-term strategy is going to drive you nuts and you'll probably make a ton of mistakes. So maybe you're better built for really short-term trades. On the other hand, are you incredibly patient? Then yeah, waiting for that perfect setup on a daily chart is for you. Success isn't about changing who you are. It's about building a system that works with your personality.
So in the end, it all comes down to this one question. You have to stop trying to predict what the market is going to do with perfect certainty, because you can't. The only variable in this whole equation that you have complete control over is you. When your own plan tells you it's time to sell, will you actually do it? Or when your emotions are screaming at you to chase a bad trade, will you have the discipline to just walk away? That is the art, that is the edge, and that is the real game.